Hi, my name is Brett Craig, the Portfolio Manager for both the Aura Core Income Fund and the Aura High Yield SME Fund. Welcome to our Funds in Focus. Both the Aura Core Income Fund and the Aura High Yield SME Fund are focused on providing back-end warehouse financing to Australian SME lenders. This is a huge market that has been underserved by the banks. Australian SMEs are 3 times more likely to apply for credit than equity finance. 1 in 6 SMEs are applying for financing, and 16.1% of SMEs would prefer to get funding from non-banks over the banks. This is a huge market, a $450 billion addressable market in fact, with $120 billion in unmet demand. The Australian non-bank lenders require debt capital to on-lend to Australian SMEs. And this is where the Aura Core Income Fund and the Aura High Yield SME Fund step in to provide financing to this sector. So what is private credit? Private credit, quite simply, is any credit that's provided outside of the banking sector. The credit that we look at is warehouse financing, distinctly separate from direct lending. So some of the key advantages of this form of financing are the fact that we take an equity position from the lenders as a first loss piece sitting below us. This provides an additional layer of protection for our investments. Our lenders provide capital to vetted Australian businesses, and they take multiple forms of security. Typical forms of security that are taken include general security agreements, personal guarantees from the directors, and specific security. Some of the types of specific security that can be taken include properties, types of equipment, livestock, invoices. So essentially, our fund gets protection from 2 layers, one being at a lender level and the second at the underlying SME level or the borrower level. Both funds are focused on a highly diversified pool of assets. In the Aura High Yield SME Fund, we have exposure to over 10,500 loans. We're currently providing capital to 7 platforms. This enables us to diversify across underlying SMEs as well as underlying loan platforms. We're able to target different types of lending to SMEs that meet their funding requirements. Looking at the granularity of the portfolio, we have an average loan size just under $100,000. Within both of our mandates, we're able to provide financing to exposures up to 5% of the portfolio size. But currently in our SME fund, the largest exposure sits at 0.71% of our total fund size. We run a very short portfolio. So looking at our portfolio statistics, over 50% of the portfolio has a maturity date under 3 months. The capital that we're providing to the SMEs is aimed at optimising their balance sheet usage, i.e. looking at enabling a business to increase stock turns through their balance sheet, allowing them to grow revenue and ultimately profitability. We manage diversification risk across a number of different methods, one being an industry split, where we're able to target certain industries that are feeling tailwinds and avoid any industries where we see headwinds coming through. One in particular at the moment that we're looking to avoid is construction, where increasing interest rates are hampering some property values, and we've seen a number of construction businesses going under. We're also looking for a representative geographic spread across the nation for small businesses. Currently in our SME fund, we're running very low arrears. So we're having delinquent loans sub 2%, which is a level we're very comfortable with. One of the key objectives for both the Aura Core Income Fund and the Aura High Yield SME Fund is the protection of investor capital. We aim to do this through 2 main methods. One, ensuring that we've got quality underlying businesses in our loan portfolios. And 2, the structuring that we put around the transactions that we invest into. This diagram shows a very simple securitisation transaction where you have payment waterfalls. Looking at this example, We have an equity piece that would be provided by the lender, sitting below both the Aura High Yield SME Fund and the Aura Core Income Fund. Sitting above that would be the subordinated piece. This is the next piece of capital sitting above equity. And then you have the most senior tranche. As principal and interest is repaid by the borrowers in the underlying pool, the first tranche that is repaid, both their principal and interest, is the senior tranche, followed by the subordinated tranche and then the equity piece. What this means is that the lender will be aligned with us as the underlying investor to have a high quality pool, because if the pool does suffer deterioration, the equity piece is the first to lose. So having high quality underlying SMEs within this pool obviously enhances the quality within that pool, reduces the probability that the equity note holder will lose capital and their income, and provides some layer of protection for our investment capital. So what are some of the benefits to investing with the Aura team? The Aura High Yield SME Fund has been producing regular income for almost 6 years come August 2023. Both funds provide regular monthly income. We strike a net asset value each month and pay out distributions to investors. Investors also have the option to take a distribution reinvestment plan. To date, our investments have had very low correlations to broader markets, and since inception, both the Aura High Yield SME Fund and the Aura Core Income Fund have retained a $1 net asset value throughout cycles. Alternative assets have been seen as a major complementary asset class for more traditional listed classes. And what we've seen is the stability provided by some of these private assets has shored up some investors' portfolios through volatile times. The Aura team have a proven track record to date, performing through the COVID cycle and the recent Australian recession. And access to this team that have a proven track record in over 6 years is something you really want from an investment manager. Both of our pools have a well-diversified set of exposures that have held up very well to date. Having a portfolio that is relatively short duration and also primarily fixed rate in exposures sub 12 months or fully floating rate exposures against the RBA cash rate provides some protection against inflation. Looking at the performance of the Aura High Yield SME Fund to date. As noted earlier, we've had a $1 net asset value since inception. The performance of the fund to date has been 9.58% per annum since inception on a cumulative basis. The fund has had 100% positive months, with distributions ranging from circa 60 basis points to 92 basis points consistently throughout the cycle. The fund has outperformed the performance benchmark year on year since inception and has had a very strong outperformance of both the RBA cash rate and the performance hurdle since inception. Just having a look at the comparables when looking at returns for the Aura High Yield SME Fund. If an investor were to put $1 million into the Aura High Yield SME Fund from the August 2017 inception date, the investor would have received a 70.52% return, amounting to 9.58% per annum since inception. As you can see from the data on the table, the Aura High Yield SME Fund has outperformed the performance benchmark since inception on either a distribution reinvestment basis or on a distribution basis. The fund has outperformed equity indices since inception, which is actually something we didn't count on as we structured this fund. The Aura High Yield SME Fund has outperformed the ASX 200 accumulation index on a compounding basis, and has also exceeded the performance of the ASX 200 index on both a compounding and a distribution taken basis. So as you can see, one thing that we're particularly focused on is consistency of return. And if you look at the volatility that's seen in both the bond markets here. We've got the high yield corporate bond index showing extreme volatility with a big downturn in 2020. And also looking at the equities indices, we've had a lot more volatility than the returns we've provided to our investors since inception. Now, just having a bit of a look at the differences between the Aura High Yield SME Fund and the Aura Core Income Fund. The Aura High Yield SME Fund is a wholesale-only strategy. This is open to sophisticated investors. This was the original strategy we opened up with and has been running since August 2017. The fund has a target return from 9 to 12%, fees of 1.25% with a 20% performance fees. We distribute on a monthly basis. The fund has been rated by both Foresight and Evergreen. We're awaiting an updated rating from Evergreen. In the last read from Foresight, the fund received a very strong rating, which is the second highest on its scale. The fund was also the winner of the HFM Asian Performance Awards in 2022, being the highest performing fixed income and high yield/distressed manager. The Aura Core Income Fund is our retail strategy, which we've launched in conjunction with our distribution partnership with Montgomery. The fund was launched on the 4th of October 2022 and is open to both wholesale and retail investors. The fund will sit senior to the Aura High Yield SME Fund, and as a result, will have a commensurately lower return target of the RBA cash rate plus 3.5% to 5.5%. The fund has a management fee of 69 basis points all inclusive, and the fund aims to provide distributions on a monthly basis. The fund has been rated very strong by Foresight Analytics, in line with the Aura High Yield SME Fund. Since the Aura Core Income Fund was launched in October, we've returned 4.34% to investors in that shortened time frame. The fund has been operational for 7 months, so we're yet to have an annualised return figure. If you have any questions in relation to the Aura High Yield SME Fund or the Aura Core Income Fund, please contact either David Buckland or Toby Roberts at Montgomery Investment Management. Thank you very much for your time.